Rep here at T3 Live and Top Gun Options. Matthew Buckley, the Chief Option Strategist here at T3 Live. And really the front page of the Wall Street Journal says it all, folks. Oil is still imploding here, 5.5-year lows. The Russian market, the ruble, absolutely imploded, and Russia came out with an out of the blue, middle of the night, 17% interest rate increase. They raised interest rates to 17%, and that really hasn't halted the demise here. And obviously, U.S. stocks are trading lower on all of this. We obviously had some bad news as well as today. U.S. manufacturing PMI, 11-month lows, and the biggest miss on record. Not only that, but yesterday there was a little bit of sleeper news that we need to cover here. The Empire Fed, 10.2 last time, looking for an increase to 12.1. Not even close. A negative 3.6 print up for the Empire region there. And the National Association of Home Builders, which is usually a very, very bullish group of late, saw a 57. Looking for a 59 print and saw a 57. Last night, HSBC's China manufacturing PMI was a miss, 49.5, looking for 49.8. So that's helping with overall instability in global markets. Today was Euro Tuesday. We had Eurozone manufacturing and services PMI, also out of Germany and France. Kind of soft, not necessarily great news, a little bit of an increase, but not enough to get us off the mat. Building permits here in the United States were down, and housing starts were down. Net, we're just looking at a whole lot of not good in world economies here. And geopolitically, interesting things are shaping up as well. Pay attention to geopolitics here, especially in Russia, folks. A cornered Putin is a dangerous thing, okay? The implosion in oil and gas, his oligarchs aren't happy. Putin's not happy. Russian media is doing, it looks like the former Soviet Union, doing a great job of blaming Western sanctions in the West for all the woes in Russia. I think Foreign Minister Lavrov, Russia's John Kerry, was quoted as saying today, which is interesting timing, that Crimea is now officially part of Russia. So instead of focusing on their economy, here they are rattling sabers. So be careful and watch a cornered Putin. Horrible news out of Pakistan. About 120, so over 100 mainly children killed by the Taliban. I mean, reports that they lit teachers on fire with gasoline, forced students to watch their teachers burn, and then killed the students. I mean, I have no idea what kind of world we're living in, folks. But keep an eye on all this geopolitical stuff, because we are a geopolitical bad event away from this whole thing ending. Tomorrow, mainly, though, the markets, we're in a holding pattern here. We were down significantly. Now the market's up a little bit. We're wallowing around, but we're in a holding pattern waiting for Ms. Yellen tomorrow. We're playing it's kind of like the guess the taper. You know, each Fed meeting, we were trying to guess when Bernanke was actually going to start the taper. Now we're in the guess the language change. When is she going to ditch for an extended period of time and keeping interest rates low, blah, blah, blah. It might be tomorrow, but with all the instability in global markets of late, she might keep her powder dry a little bit. But if she doesn't do it tomorrow, it'll be the next one, okay? Because she really does have to prep the battlefield. They're not just going to come out and go, hey, we're raising interest rates. The Fed isn't supposed to be known for its shocking. It's supposed to be known for its smooth guidance, okay? So they're going to have to pave the battlefield by ditching that language, because the Fed knows that we look at every word that they put out. So after they change the language, extended period of time, we can expect interest rates to increase. I don't know. I'm going to call it halftime of next year, maybe end of Q2. Halfway through next year, I think interest rates might start rising here, barring some external macro event that is just unforeseen. And as you guys know, as interest rates are high, stocks will die. Interest rates are low, stocks will grow. So a higher rate interest environment just isn't going to be good for the United States. Not that we have a lot of good going on right now. So interesting times. Live in interesting times in this market. Speaking of interesting times, the VIX yesterday. Anybody check out the VIX? The VIX yesterday was down. Market down, VIX down is a very, very weird thing. And I was scratching my head, looking at this like the RCA dog yesterday, and now I know. it was either noise or some trading issues. Some options exchanges might have been broken or something. It didn't make sense. Okay, and I'll leave it at that. The WTF moment here. So very, very interesting, and not to be. I haven't seen that in a long time. Market down, VIX down is odd. So keep an eye on that. Okay. All right, guys. Have a great rest of your day. Happy hunting. Make sure you hedge, and I'll be back with tomorrow's sit rep.